As much time as we spend talking about the wholesale collapse in the energy, metals, and mining spaces over the past year, the fact is that virtually all commodities have been hurting, including the agriculture space, which has been going through pretty lean times lately. However, a couple days ago, we got this really pretty good number from AGCO, the world's third largest maker and distributor of agricultural equipment like tractors and combines. AGCO reported on Wednesday morning, and while their revenues were a bit light, the company nevertheless delivered a robust 27-cent earnings beat off of a 50-cent basis. Even better, AGCO gave stronger than expected sales and earnings guidance for the full year. That's how the stock, which had been put through the meat grinder over the summer, managed to jump more than $4 on Wednesday from 44 to 48. I think it can finally get some traction. Don't get me wrong, the backdrop is still plenty ugly. AGCO made it clear that wheat grain prices are causing reduced demand for all sorts of farm equipment, especially the larger models. But the company's focused on aggressively controlling costs and improving execution, and at least for the moment, it feels like they've been able to take control of their own destiny. Let's take a closer look with Martin Rieschenhagen. He's the incredibly, let's just say, seer-like part of this industry. Chairman and CEO of AGCO. To hear more about the quarter where his company's headed, Mr. Rieschenhagen, welcome back to Mad Money.
Good afternoon, Jim. You're so kind again.
Well, look, you saw it all coming. I mean, you're still stuck with a hand. You're an ag company. It's not like you're suddenly going to be an aerospace company, but you did come on the show when everyone was very bullish about that group and said you saw leaner times. So now I'm going to ask you, now that everybody is getting bearish, do you see possibly better times?
Well, not really. The storm is still blowing. All hands on deck. So we try to outperform our peers, which is not easy. We have great competitors, but I'm not so sure how 2016 will look like. Commodity prices still are depressed, are low. Farmers are, let's say, in pretty good shape because they deleveraged their businesses during the last years, but I'm a little scared that 2016 wouldn't look much better.
But you're still, I mean, can you maintain that incredibly high free cash flow that I was kind of shocked to see that you put up?
Yeah, that's the idea. So that means we want to have low inventories, and that's one of the main tools here. And that's what basically could bump our, raise our cash flow so much.
Okay, we got to talk about Brazil because you've always been honest. You talked about Russia before Russia was bad. You know, Martin, Brazil, you have to be there because you're an agricultural company. What would happen if you put up 5 plants there to take advantage of the real? I don't know. I mean, I'm just struggling with how you can't leave Brazil. But Brazil's a black hole, Martin.
Yeah, Brazil is in difficult times. So we have a very weak government, most probably one of the worst presidents ever. And they start to discontinue funding for farmers, which of course is very bad, and which is a poor policy because in Brazil farming is extremely important. But still, we are on a, I think in the meantime we bottomed out, and hopefully we can see a little bit better demand next year.
Well, I mean, is it possible that government, I mean, this is what a lot of people I know who are short real, short the bonds, that government falls and a better government comes in?
Yeah, well, actually, there are people talking about indictment. I'm not sure whether that will happen. And then also, there are a lot of things which didn't work so well. Corruption did factor in, and there are a lot of investigations going on also regarding active government, actually people from the government. So that's not over yet. Then next year we have the Olympic Games, and that normally also makes markets a little bit more difficult. People are not focused so much on business, but on other things.
Okay, well, let's go China. Opening a new factory in China. I'm feeling better about the Chinese economy, but it's the consumer economy I feel better. How about the agricultural economy over there?
Yeah, business is actually doing pretty well. Our challenge is to gain market share, and we come in with a brand new design, with a much better quality, much more durable product, and we will ask for a slightly higher price than the Chinese competitors. So that's the challenge, to get that, to get farmers used to buy something better, so to say, but also for a slightly higher price.
Now, I got to ask you about this. Would it matter if more farmers went natural and organic, or is that they just use your equipment no matter what?
This is what is happening mainly in the Western world, right. And it's a trend. So that means it started in Europe. In my home country of Germany, people did get a little excited about it. And now it's coming also over to America. It's growing. People eat less meat. Also, that's another trend which is good for arable farmers. Overall, I think we will see more of this in the future.
All right, I was going to say that because I think plant-based foods, plant-based drinks, I mean, the younger generation, Martin, unlike your my generation, they don't eat meat, and they don't like to drink regular milk. They like to take almonds and cashews and other things that you and I think are snacks and make milk out of them.
I will have a nice steak after the show with my wife and my son, who is here. So, but it's true. There's a new trend, and the good thing is people are prepared to pay more for those products, which basically is good for the farm income.
All right, that's important. We're going to leave it on some positive notes because you delivered positive numbers. Martin Rieschenhagen, Chairman, President, CEO of AGCO. Always great to see you, sir.
Thank you.
Here's a man who takes a hand and augments it. He doesn't just sit there and say, you know what, woe is me. That's why I like him. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.